Hello everyone, and welcome back to the channel. Today, we're diving into one of the most impactful accounting standards of recent years, AASB 16 Leases. If you're a business owner, a finance professional, or an accounting student, you need to know this stuff. The old way, AASB 117. Think about how a company used to account for leases, like renting an office building or a company car. Under the old standard, AASB 117, you had two types of leases: finance leases. These were leases where the company essentially owned the asset. They were put on the balance sheet, just like a loan. Operating leases, these were a simple rental arrangement. You paid rent, and it was treated as an expense on the income statement. Crucially, they were kept off the balance sheet. This meant a company's debt and assets could look a lot smaller than they actually were. The new way, AASB 16. AASB 16 changed everything. The core principle is simple: if you have the right to use an asset for a period of time, you have an asset and a liability. There are no more operating leases for most companies. Instead, almost all leases now go on the balance sheet. This means two new entries appear on your balance sheet: a right-of-use asset. This represents the company's right to use the leased asset. A lease liability. This is the company's obligation to make future lease payments. What this means for financial statements. This change has a domino effect on your financial reports, balance sheet. Your total assets and total liabilities will increase. This gives a more accurate picture of the company's financial health and its obligations. Income statement. The old single rent expense is gone. It's replaced by two different expenses: depreciation on the right-of-use asset and interest expense on the lease liability. This impacts your net profit and, importantly, increases your EBITDA, earnings before interest, taxes, depreciation, and amortization. Key financial ratios. Because liabilities are now higher, ratios like the debt-to-equity ratio and gearing ratio will increase. Analysts now need to adjust their models to account for this change, ensuring they are comparing apples to apples across companies. Why this change was important. AASB 16 was introduced to improve transparency and comparability. By bringing all leases onto the balance sheet, investors and creditors can get a clearer, more complete picture of a company's financial commitments. It removes the ability for companies to use operating leases to hide significant liabilities, which was a common criticism of the old standard. So, in a nutshell, AASB 16 is all about a simple idea with a big impact. If you're using an asset and you have to pay for it over time, it belongs on your balance sheet. That's a quick rundown of AASB 16. If you found this helpful, be sure to like this video, subscribe to the channel, and hit that notification bell so you don't miss our next deep dive into the world of finance.